What's up, guys? It's Intellectual Money here. As you can see, we're in a new environment that will probably be temporary. Most of my videos will be in the other environment that you guys previously see me at. And today we're going to be talking about a very popular asset class, and that happens to be the stock market. The stock market is a great wealth building tool that, with some practice and some wisdom here and there, can provide its participants with a tremendous amount of profits. I'm not here to downplay the stock market. As you may know from my other videos, I am currently a participant in the stock market, and today we're just going to take a deeper look into the stock market and see where we're at today in terms of valuations and just where the stock market is at as a whole. Over the long term, like 10 to 20 plus years, it's hard to not be a cheerleader of American publicly traded companies and exchanges. Everything on a broad spectrum just tends to go up and to the right. But as an investor, we cannot always trust the stock market in the short term, as certain environmental and economical factors similar to the dot-com bubble and 2008-2009 crash can come into play. The basis of this video will not be about me trying to time the stock market like a Michael Burry. I have far less wisdom than him to even attempt to do that for the stock market. When it comes to stocks, my values lie mostly with holding high growth potential investments for 5 to 10 years, regardless of the price and the short-term fluctuations. However, there sometimes will come a time where certain factors will have me change up that sentiment a little bit more with some of my lesser confident plays for the future. This tends to happen when I identify that another asset class or investment is at an extremely cheap valuation. I'm sure from time to time some of my viewers feel the same way in their investment journey. Since March 2020, the stock market has been on an above average uptrend due to many factors like quantitative easing, business performance, interest rates, and even just people just realizing the end of the world wasn't going to happen because of this worldwide health crisis. Well, we sit here today in July 2021 with exchanges like the Dow Jones, S&P 500, and the Nasdaq all at record highs at the same time as interest rates being at historical lows. For some, they've utilized this time since 2020 up until now to implement their experience in the stock market and ended up well. Or, for other cases, just sheer luck. A lot of portfolios tend to be in the green currently for people that got in around that time, as stocks seem to be trading somewhere around perfection at this moment. It's important as an investor to know how to value a company by looking at the financials, the PE ratios, etc., etc. But I am aware this is YouTube, and not many people have, an attention span good enough to sit through all that. So today I'll be showing a shortcut of what I use to kind of try to see where a company is valued in the short term compared to its financials. It's a website called stockcharts.com, and with it, it provides us with indicators in relationship to a particular stock price and how we can identify in a broadish spectrum of if a stock is overvalued or undervalued at the current moment. For these examples, I'll be using an indicator called the RSI. If we look at a company like NVIDIA, and we see on the RSI chart that ever since June to around somewhere around the middle of July, like July 12th to July 15th or so, NVIDIA has been pretty much an overvalued stock ever since it first broke $700, $800 for the first time. So what this is telling us is that anyone buying that stock around that time wasn't really getting that good of a deal. And as we can see, as of very recently, NVIDIA has dropped severely to a more attractive price. So I've currently been looking on the daily time frame. This website allows you to switch between the daily and the weekly. And with that, you guys can figure out which time frames you guys like to look at in terms of trying to figure out the valuation using the RSI and any stock that you want to look at. And it's a great way to figure out overvaluations and undervaluations of a stock. Now, let's look at a stock that I'm sure you guys are also probably aware of. It's a part of the FANG group, and that would be Google. So the way the RSI works is that above 70 is overvalued, and below 30 is when it reaches an undervalued valuation. With Google being, close to that 70 mark, close to being overvalued, and with the stock market, as mentioned, pretty much near all-time highs, I'm not liking Google right now as a position to add on. I will still keep my Google shares, but it's just not looking like the proper price point for me. But I will keep my eyes on it, and this is just my opinions on the market. I'm just trying to show you guys another way of valuing a particular stock. All right, so with pretty much everything factored in, Google trading at pretty much all-time highs, these exchanges pretty much trading near all-time highs, and the current condition of the economy and everything going on, it's not the right time for me to continue to add on to my position into Google. But with this RSI, you can continually look at other stocks and just check out valuations. The RSI is not recording all the stocks in the stock market trading at overbought or near overbought. There are still current deals that the RSI is at least showing, and to help us out, that it is not really that overbought. So there are some deals out in the stock market. They're just fewer and far between, as a lot of the more famous or well-known, I should say, stocks are trading pretty high at the moment. So this is just for me. This what some of these factors tell me, and obviously I'll be doing a lot more extensive research other than this video, but just to show you guys a little snippets of what I would be doing. What this will let me know is, all right, so with stocks being relatively high at the moment, this is probably a good time for me to have my cash in a high yield savings account, or maybe in a particular different asset class other than the stock market, and keep my money looking for deals in that venture. Now, this isn't me saying that the stock market's in a bubble, as Michael Burry has recently stated. Even though Michael Burry has not provided us with any timeline of when this bubble is going to pop, he just states it's going to pop so that when it eventually does, he looks like a genius, which I'm not saying he isn't. It's just, I just hate, or dislike, I should say. Hate's a strong word. I just like the lack of, just, of clarity in his insight onto the market. But to each their own. For me, I don't get too in particular of how, the stock market's going to react in terms of like, oh, we're going to see a crash at this point. I'm not like too big on that. However, I am interested to see when the Feds do eventually raise interest rates. I'm interested to see how that would affect the stock market, as a lot of people are getting on margin and investing into stocks. And I would just like to see how that would affect them, which would ultimately potentially affect the broad market. The reason why I look at the stock market this way, and just trying to see times when it's undervalued and times when it's overvalued, is because as an investor, I strive to be successful in the short, medium, and long term. And in doing so, I have to keep my pulse on the market as much as I can. With this, I'll be able to make sure my money is positioned in the right places at the right times that will, in hopes, provide me with the most gains, or even just the gains that I'm looking for. In any market, you could always find a deal. In the stock market, in the real estate market, even though I will not be evaluating the real estate market in this particular video, for me, these deals are just coming too few and far between, in my opinion, due to the amount of money printing that has been printed recently in the U.S. in particular, and also the manipulation of the interest rates to to kind of give that extra pump back into the market that was in a lot of aspects dying last year. However, if you do find a deal, like let's say like in the real estate market, that would be fantastic, because you'll be able to lock in these lower interest rates, which would, for an investment property would definitely be good for the long term. It's just that, you just have to dig a little bit deeper as there's a lot of competition in that market. Now I'm aware that what Powell and the Fed has done, these factors will affect all the markets essentially. It's like knocking over one domino and then a slew of other dominoes fall thereafter. But for me, when I evaluate all the factors and everything at this current time in July, I think the best use of capital, my free capital, is for either holding it in a cash position like a high yield savings account, or buying in or putting like buy limit orders onto support levels that I believe for certain cryptocurrencies that I believe in, so that if we see a deeper dip in the crypto market to certain valuations that would be attractive for me, that's where I see the best use of my capital. From what I'm looking at in the crypto markets, it's very possible that one more shakeout is imminent. And for me, because of that, it's crucial to make sure that I have my money in position to capitalize on that shakeout, whether it happens if I'm sleeping, eating, riding my bicycle, not paying attention to the markets. And I can do that with setting these limit orders at particular zones and regions that I'm interested in. And perhaps even if we don't see another shakeout in the crypto markets, I already have enough invested where I am comfortable with with the bull market continuing on from where we're at currently. And not only that, will I be using the indicators that I have in one of my past videos, When to Buy Bitcoin. I dropped that recently. You guys can check that out to see some of the indicators I'm using to help me make my decisions for the short term, which will hopefully benefit for the long term. Of course, this game plan is subject to change, but when I'm looking at my portfolio, it seemed like the best choice for me right now. Now, if you're watching this video and you're like, wow, this guy seems like he really knows his stuff, I want to be in charge of my finances just like him. That is great, because that's how I started. I was watching somebody else and I had that same thought. However, it's important not to just blindly, copy me or anyone else and just make investments based off of exactly what any of us are saying, because it's always up to you as an investor to make that decision for yourself. Because these people that you may come into contact with, you see they have a certain confidence in the way they're moving their money, right? That confidence comes from the due diligence and the research that hopefully, if they know what they're doing, that they put into their work, that we put into our work, to make sure that our decisions are thought through. They're not just because we heard someone else say it, and it's what we deem to be best for at this current moment. If you're having trouble with this, if you're very new, you can always consult a financial advisor, as I currently am not that guy. Everything in this video is not financial advice. But what I would suggest is to learn that financial pivot. It's when some investors have this because they're adept at multiple markets, or even just so adept at the market that they're currently in, that when the markets seem to change and the economy seems to change and certain factors seem to change, they're able to pivot their money and put it in the right position at the right time to produce the best results for them. Keep learning, keep perfecting your craft. You may not even need an investment pivot in your investments. Maybe you just dollar cost averaging into what you like. There's so many different ways to make money, whether in the markets or even in other ways. You just have to find what's right for you. Set time frames and expectations for your investments, and ultimately just make decisions that you feel personally that you can live with. It's almost like you're a coach of a sports team, but instead of players, it's your money. It's about how best can this money, plus the resources that we have to us, whether it be other people or just information, how best can we use that to have us win the game, the proverbial money game at the end? I hope you guys found value in this video. That's all I have for this one. If you liked what I had to say, please give us a subscribe, smash the like button like Tinder. If there's anything else you have with anything that I mentioned, anything you guys want to talk about, put that in the comment section. Let's have a discussion. And thank you guys for watching.